what is envelope indicator. And by the end of this session, traders should be able to understand what is envelopes indicator, how to add it, interpret and use the indicator. The envelope is one of the popular indicator used in today's market. The envelope indicator's main role is to identify the upper and bottom bands of a trading range. With a moving average as the base, moving average envelopes can be used as a trend following indicator. Other than trend following, the envelopes can also be used to identify overbought and oversold levels when the trend is relatively flat, and also to provide dynamic support and resistance. The moving average envelope smooths out price fluctuation and allows us to see the bigger picture of the market. Basically, the indicator plots two moving average envelopes on a price chart. One is placed at a certain distance above and the other one is placed below. If the market price breaks through these bands, we can decide on movement and trade accordingly. Let's look how this envelope is calculated. The basic concept is to take the price of the simple moving average SMA and add a particular deviation percentage distance to it. Then it is placed as an upper envelope above the SMA. Similarly, for the lower band, a particular deviation percentage subtracted from the SMA and then place it below the SMA as a lower envelope. We'll go over the envelopes indicator in detail on the chart with a setting of 20 period with 1% deviation, and as well as how to use it with a combination of price action. Let's begin with placing the envelopes indicator on chart. To place the envelopes indicator on chart, there is a few methods to do it. The first method is go to Insert, then Indicators. Under the trend, select the envelopes. The second method will be the easiest one, as traders click and drop it from the navigator panel. To do that, simply go to Navigator panel, Indicators. Under the trend, click the envelopes, drag and drop it on chart. It's done. Now let's look how to use the envelopes indicator in trading. There are four methods in which traders can use the envelope indicator during trading, such as trend confirmation, overbought and oversold during sideways market, breakout, and finally with combination of higher period of moving average. Let's look one by one in detail how to use them. Trend confirmation. With the envelopes, traders can look at the direction of the bands to get an idea about the trend. If the bands are sloping upward, then it confirms an uptrend. If the bands are sloping downward, it confirms a downtrend. And when the envelopes are flat, the market will be in sideways. Overbought and oversold. Moving average envelopes is a great indicator to identify the overbought and oversold level during sideways market. Traders could buy when the price penetrates the lower envelopes and closes back inside the envelope. Likewise, traders might sell the price penetrates the upper envelope and then closes back inside the envelope. In this example, there is times when price initially moves above or below an envelope but then reverses. This usually happens when the moving average slope is flat, and it's easy to identify overbought and oversold levels. When the price moves above the upper envelope, this can be considered as an overbought, and when the price moves below the lower envelope, this can be considered as oversold. It is not easy to spot overbought and oversold levels though. When the bullish trend is strong, the price can become overbought and stay overbought. The same goes for being oversold. This is why it's best to pay attention to the slope of the moving average and make sure it is flat. As an example here, when the market is in sideways, the upper envelope acts as a strong resistance level and the lower envelope as a strong support level. Whenever price traded near the upper envelope, look for sell opportunity. Similarly, Whenever price traded near the lower envelope, look for buy opportunity. Here are a few examples of overbought and oversold signals. Breakout. Usually, price will break out of envelope after the consolidation period in one direction or the other. A trader will look for buy opportunity when the price breaks above the upper envelope. And when price breaks below the lower envelope, a trader will look for a sell opportunity. Basically, moving average envelopes can be used to spot big moves that signal the start of an extended trend. Based on my experience, the only way to select the ideal parameter for each instrument is by practice and by doing backtests. In this example, the price broke the upper envelope and continued moving above the band. This shows buying strength. The inverse logic can be applied for downtrend. A strong move below the lower envelope signals weakness that can foreshadow the extended downtrend. Remember to use narrow envelopes if you want to chase the breakout moves. Here are a few examples of breakout signals. Combination. Based on my experience as a professional trader, the best way to use the envelopes indicator is together with moving average to execute the buy or sell trades, which gives high winning rate. For example, if the price above the 200 period moving average and the price breaks out the upper envelopes, always look for buy signal. Similarly, if the price below the 200 period moving average and the price breaks out the lower envelopes, always look for sell signal. Here are a few examples of envelopes combination signal.